So thank you, Sydney. You know, a few months ago, Sydney had actually come to Atlanta, and we went for lunch, and he asked me to speak, and of course, you know, I said, yeah, definitely, I'm looking forward to it. When he said, you know, we were sitting there, we were eating lunch, and he said, you know, feel free to send some signage, you know, I want you to really use this as an opportunity to help, you know, get your brand out there. You know, I really want to give you some prominent brand exposure. And, you know, while I thought that is so generous, you know, I didn't ship any signage or anything because, you know, I just started thinking about it, and I'm just really not that comfortable, you know, being so self-promotional. So, you know, I'm like, Sydney, thank you, I appreciate it, but, you know, I'm shy, you know, when it comes to that, and I really just don't want, you know, to really be just promoting my brand at your event. You know, I really just didn't feel right about it. No, but seriously, I felt like I didn't add a lot of humor into this presentation, so I felt like I needed to start with like a shtick, so sorry. But seriously, you know, on a serious note, Sydney, I just want to say thank you, not only for your generosity, but also for your friendship and support over the years. And it's always an honor to participate in your events. I really have always had such a great experience at your events. I always feel like they have really such a warmth to them, and you really bring a really truly engaged crowd. And you know, I made so many connections just from your entire CrowdfundBeat platform, and you know, obtaining new readers and new business, and you know, I really appreciate it, and I want to say thanks. So, to say everyone, give a hand to Sydney. So, thank you. So today I want to talk about something a little different than I usually talk about. I want to talk about what I really see as the main obstacle to the growth of our industry, and that's distribution. So we are all here today in this room. I think we're all drinking the same Kool-Aid. So, you know, we kind of are on the same page where we truly believe that crowd finance is the future of finance. But, you know, we still have one problem. And while crowd finance is the future of finance, we don't have a crowd. You know, really, there's no one out there that's clamoring for our products. And, you know, most people still don't know what crowd finance is. I mean, you know, we really just don't have a distribution solution. In fact, we have an industry-wide distribution problem, and it exists throughout the entire financial services industry. It's not just our industry, it's all over financial services. You know, simply old distribution channels are completely broken. They just don't work anymore, and we really need to find a way to get, you know, investment products, all investment products, not just, you know, these really exciting new emerging class of new retail alternatives, but all investment products into the hands of retail investors. You know, retail investors have just really, they left the building. You know, retail investors have been really on the run. And that's the first problem we really need to tackle. Where are the retail investors? You know, they've basically been pushed out of the markets mostly due to, you know, escaping market volatility. You know, a lot of the rules and regulations, you know, FINRA especially, and you know, a new rule, you know, that's basically introduced almost on a daily basis. You know, it just becomes so expensive for brokerage firms to really accommodate small retail investors. They essentially just threw their arms up in the air and said, you know what, forget it, we're not even going to bother. You know, look what happened when the DOL fiduciary rule was introduced. Are you guys following? Have you followed so the DOL fiduciary rule, basically it expanded the definition of fiduciaries to include commission-based brokers. And what that did was add a lot of unwelcomed and added liability to brokerage firms. And what it started to do was eliminate not only financial advisors, but also investment choices from the traditional retirement planning equation. So Merrill Lynch basically closed its commission-based retail retirement business altogether. Edward Jones, I mean, you don't get more retail than Edward Jones. I mean, that is just the, you know, that is the quintessential retail shop. I mean, Edward Jones said that it was going to stop offering mutual funds and ETFs as an option in its retirement accounts. So, let that sink in for just a minute, that brokerage firms, retail brokerage firms, would rather limit access to investment products or exit the retail retirement business altogether than deal with the regulatory headaches of helping small investors save for retirement. I mean, that's a problem. I also think greed played a factor too. I mean, it just really just more lucrative and easier to just, work with institutions or go after, the whale, as we used to call it when I started off as a retail brokerage industry. But really what it did was it drove the advisors, took the advisors out of the equation. And it's really not just in our industry. I mean, look at, peer-to-peer lending. That's in the P2P, peer-to-peer is the name, it was the original name of the industry for, online lending. They actually had to change its name to marketplace lending in 2014 because it became so institutionally driven. Again, it's a problem. But fortunately, retail is returning, and it's being brought back, I think, these 5 factors. These, I think, are 5 factors that are really going to re-engage the crowd and really help us rebuild retail support. It's fintech. You guys all know fintech, financial technology, especially advancements in micro technologies, which we'll talk about in a second. Reg tech, people are now using that term for modern securities legislation that's being introduced to support a lot of this modern financial technology that's developing. Alt tech is kind of the name of what we have, we call investment product innovation. It's sort of that merger between fintech and reg tech. But now I'm going to add 2 more words to the modern finance lexicon. I'm going to add media tech and advisor tech, and we're going to talk about that in a second. I just like to make up new words. So just a little on fintech. It's no surprise. I mean, technology has been dislocating financial services for decades now. Look at, what happened, if the rise of the discount brokerages and using technology to take commissions from, hundreds of dollars down to $7 a trade, down to pennies. But, now what's happening is that we are reaching this seminal moment where instead of disrupting the brokerage industry, technology is utterly going to obsolete it. And technology, especially, advancements in micro investing technologies, it's empowering retail investors. It's enabling them to mitigate risk and enhance returns through diversification. For decades now, it's all been proven that diversification is a very, instrumental and important strategy to portfolio planning. It's also diversification. What made Lending Club and Prosper so successful was the ability, as a small retail investor, to take $2,500. You're not, and put it on the platform, but instead of, putting that into just one borrower, and maybe risking that he's going to default, you're able to take that $2,500 and spread that across 100 different notes. That's what made people really generate, attractive returns. It was the ability to diversify within those platforms. Now, as the industry expands, we're having the ability to diversify across a wider range of asset classes across many different platforms, giving retail investors the opportunity to, access higher yielding investment products. And, I think what we're going to start to see now is that same kind of strategy that was used for Prosper and Lending Club is going to seep into the equity markets. And we're going to see some interesting opportunities, with Title III and Reg A+. So enough can't be said for the power of micro technologies. Now, Reg Tech, which is really given, as we said, the name to modern securities legislation. We all know, started off with the Jobs Act a couple of years back. But, there's some really interesting bills that are out there now. HR 2187 is Congressman Schweikert's bill expanding the definition of the accredited investor, so enabling more people an opportunity to access alternative products. That actually passed the House by an overwhelming majority. It's now in the Senate. It's been referred to the Committee on Banking, Housing, and Urban Affairs. Congressman McHenry's Fixed Crowdfunding Act, which also passed the House by an overwhelming majority. It's sitting in the Senate as well. But that actually does some really interesting things. I mean, it adds testing of the waters to Title III offerings, raises the threshold to $5 million, and opens it up to SPVs. And I think that those are really key factors that will really help aid to or lend to making Title III much more successful. And of course, Reg A Plus is, just a complete game changer. Originally intended to facilitate small business capital formation, get companies, small earlier stage companies, public faster. But where we're really seeing, I think, the most benefits and advantages is utilizing it to create, to engineer new fixed income products for the masses. And we're going to talk a lot about that today, especially on the real estate panel. There's, a lot of really exciting products that are coming out with that to put yield back in people's portfolios. Now a little bit about Alt-Tech. This is, this new unit, this is Alt-Tech, this kind of that merger between FinTech and RegTech is inspiring Alt-Tech, or a whole new universe of alternative investment products for the masses. And, talking about Reg A Plus, I mean, Ground Floor was a pioneer in that they were able to utilize Reg A Plus to create what's called an LRO, which is a limited recourse obligation, to bring yield back into an opportunity to access real estate into the portfolio, and their investors have been getting like something around, averaging now 13% per year. I mean, that's, diversifying in these real estate properties. American Homeowners Preservation, Street Shares, a great platform that utilize Reg A Plus to allow investors to access small business debt, especially small businesses that are veteran owned. Realty Mogul came out with a new REIT for retail investors, Impact Housing, and we have Eddie here. So, I mean, really, there's just so much really happening in that space now. A little bit on media tech. First of all, I want to say financial media is about to get a whole lot edgier, engaging, inclusive, and interactive. Now, unless you've been living under a rock for the past, let's say, year, you are feeling the shockwaves of media tech. Okay, just look at the 2016 election. Okay, people were not tuning in clearly to CNN. Instead, they were creating and they were distributing news via social media. And we have reached this really, truly historic period, I think, of mass media. I mean, each one of us has now become, we're each a broadcast journalist, we're each a pundit. We were all feasting on the very same content that we're creating. We're all the consumer, the producer, the lender, the borrower, the investor, the financier, we're the advertiser, we're the brand, we're everything. We're crowd investors, we're crowd lenders, we're also the crowd police. And it's really an unprecedented moment, I think, for media. I mean, we are now deciding what we watch, what we read, what we broadcast, what we believe, what we invest, and how we invest. It's not the government, it's not the networks, it's not Wall Street, it's we the people. And this democratization of media, I think, is just really powerful, and I do think it is the future. We're seeing all these new media voices that are rising. There's a whole new generation of investors. they're not watching CNBC and reading the Wall Street Journal. I mean, that's what old people do. Seriously. The millennials and this new generation, I mean, this is what they're reading and digesting, and they're interacting, they're, stock tweeting and whatever, but, it's a whole new way of, engaging people about finance. And it leads me to like the final factor, which is advisor tech. Just like media has gone through this incredible transformation, we're seeing traditional distribution channels are also being displaced, and their new retail distribution channels are completely obsoleting the old ones. I mean, when was the last time that any of you got a phone call from a Merrill Lynch broker, trying to pitch you on 100 shares of IBM? I mean, it's been, or fax blast even, or even an email blast pitching on a stock. I mean, all the distribution channels from, what we used to know are really all gone. So, advisor tech is really the future of the retail brokerage industry. Robo-advisors, digital investing apps, they're changing the way we invest. They're changing how we obtain information. They're changing how we invest, where we invest, why we invest. You may have heard of some of these apps, Acorns, Betterment, Wealthfront, Robinhood, some of these robo-advisors. You probably haven't heard of Worthy yet, but you will. I believe that this is really, truly a game changer. It's kind of like an Acorns, if I could describe it, on steroids. But with a lot more bells and whistles. And I've been actively using it for a couple of months now. And basically what you do, it's sort of like Acorns, where it has that roundup piece. So every time you shop, the money that rounds up. So let's say I go and I buy, spend $19.80 on a product somewhere. Well, my Worthy account is linked to my bank account. And instead it'll charge me $20 for this $19.80 product, and that 20 cents goes into my Worthy account. My Worthy account right now, and this is only just from a couple of months, has a couple $100 in it just from doing these roundups, and it's now it's generating 5% in small business, veteran-owned small businesses. It makes me feel good about also where my money is going. So envision this. By the end of the year, I'm probably going to have about $1,200, let's say, saved in my Worthy account. Never wrote them a check. This is just from spending. Now, $1,200. Now and it's heavily weighted now in these, small business debt. But now I log on to Worthy, and Worthy says to me, you really need to understand the importance of diversification, and you're really, heavily weighted in small business debt. Maybe should put, some money into, you have maybe some exposure to real estate. Maybe you want to, move some of that from where it's now to maybe some, ground floor notes, or, the Realty Mogul REIT. I'm going to click yes. It's a no-brainer for me. I mean, it's, just think of the difference where it's not a broker calling me up and asking me to write a check. I'm not even getting that reason. There's no reason for me to even say no. It just changes the whole distribution game. I mean, it used to be, when brokers would call up someone, cold call them, while they were watching, Family Feud or interrupting Family Feud, whatever, and they would just start, pitching them on investment products. I mean, people didn't want to be bothered. Here, it gave you every reason to say no. Here, there's no reason to say no. It changes the whole distribution game. I just think it's truly the future of investment product distribution. It's really a game changer. And truly the future of finance is here. I think fintech, reg tech, alt tech, media tech, advisor tech, this is really the future of financial services. And I'm just going to leave you with just one last thing to think about. Throughout the past century, dynasty wealth has been created by being on the forefront of shifts in mass media and retail distribution. Just look at the companies that went on to just really create massive wealth over the years. You know, NBC, you know, Amazon, Google, Facebook. I mean, we are at such an incredible moment in financial history right now. And this is just really the beginning of the future. So with that, I'd just like to say thank you. Thanks again, Sydney, for having me. It's going to be a great day today. I'm really looking forward to hanging out with everyone and seeing the rest of the presentations. Thanks.